Hello friends, and welcome to my channel. Let's learn accountancy with Dr. Sunil Kadar. On this channel, I will be uploading videos on various topics of accountancy, and I hope you will enjoy those videos. So today we will be discussing here the numerical MCQs in regards to preparation of final accounts of a company. So MCQs, number one is in front of you. Opening balance of profit and loss account was rupees 7,50,000. Dividend paid rupees 1,50,000. Closing balance of profit and loss account was rupees 5 lakh. Company's net income, net loss for the current year was dash dash. So the options are net loss rupees 1 lakh, net loss rupees 2,50,000, net profit rupees 1 lakh, net profit 6,50,000. So these are the four options given to us, and we have to select the more appropriate answer for this. So let us understand the question first. They had given us the opening balance of profit and loss account. The current year's appropriation is 1,50,000 in the form of dividend, and the closing balance of profit and loss account is given us 5 lakh. So to reach what was the current year's profit or loss, we need to calculate backwards so that we'll be able to get the correct answer, and we'll do that. Let us discuss it, but let me tell you first, the correct answer is 1 lakh. And we'll counter check it how the 1 lakh is correct. So what we have taken opening balance, closing balance, not opening, closing balance after paying everything, it has remained 5 lakh, and in which we will be added 1,50,000 dividend paid during the year. So when we add back that, the net profit before dividend is 6,50,000. And when we compare this balance with the opening balance, the difference between these two balance could be either profit or loss. So let us compare. The net profit before dividend is 6,50,000, and company has opening balance of 7,50,000 profit available. So the difference between these two items is either profit or loss. But when we compare this, there is a negative. It indicates that loss. So that company's current year loss was 1 lakh rupees. Let's counter check it what we said is wrong or right. See here. Opening balance of profit and loss account was given here 7,50,000. We are taken as it is. And we have to add the current year's profit or loss. But what we calculated, there is a loss, so it would be deducted from it. So loss, 7,50,000 minus the current year's loss is deducted. So after the loss, the profit available for appropriation is 6,50,000, and from which the dividend is deducted. So the balance is 1,50,000 deducted from it, and the closing balance available for to be carried forwarded to the next year or subsequent period is 5 lakh. That's what it is given. So the correct answer is 5 lakh. The other option says 2,50,000. They have not considered 1,50,000 deducted. I'm not going to explain all the options in detail because we'll discuss only the correct options here. As you know, the correct option used to be change its color. That's a correct answer. And we will not explain. That might be calculated with the wrong amount, with the wrong assumptions. So the correct answer is this. The remaining 2 or 3 are incorrect. So let's move on to the next objectives. Objective number 2, balance sheet as on 31st March 2021 shows share capital rupees 20 lakh, Profit and loss on a 1st April 2020, rupees 67,000. Profit for the year, rupees 1,90,610. The company wants to transfer rupees 50,000 to the debenture redemption reserve and declare 10% dividend. The balance in a profit and loss appropriation account is dash dash. And the options are rupees 2,07,610, the appropriation balance. That's what we need to find out. And the second option is rupees 7,610. Third option is given 1 lakh, rupees 1,07,610, rupees 3,07,610. These are the four options are given, and the correct answer is number one, 2 lakh, rupees 2,07,610. Now let us counter check it, how it is correct. So the company share capital is 20 lakh, we have taken care of. Then opening balance of profit is given here, 67,000, that's opening capital, plus the current year's profit will be added in it. So the profit available for distribution is 2,57,610. And from that, the allocation is carried out towards the debenture redemption reserve, transferred to DRR 50,000. So we will get a balance available 2,07,610. Further, they told there is a dividend declared 10%. When it is declared, it will not be deducted from the profit. So the dividends impact will not be there. So nil amount will be deducted. So the closing balance of this profit and loss account, 2,07,610 is the appropriate answer. So one may have a doubt, what about this dividend, 10% dividend? 2 lakhs, 10%, sorry, 20 lakhs, 10% is 2 lakh dividend supposed to be paid, but it is declared, not yet paid. When it will be paid, it will be deducted from the profit. Therefore, the 2 lakhs impact is not considered. So the balance available in the profit and loss account for this specific period is 2,07,610 is correct. The other option 7,610 where they have deducted 2 lakh from it, therefore it is incorrect. The another one also in that manner, they have wrongly calculated. You can pause the video and check out how it is calculated. Either it is taken a wrong assumption or a wrong amount. Therefore, these answers are not correct. This one is correct. These other three options are incorrect, which is calculated with a wrong amount and wrong assumption. So let's move on to the third objective. The third objectives for us is the company has 5% government security having face value of rupees 5 lakh. Cost is rupees 5,50,000 and current market value is 4,75,000. Interest on that government security will be. So our job is to tell them how much would be the interest received. The options given to us, rupees 27,500, rupees 25,000, rupees 23,750, rupees 50,000. So out of this, as you know, guys, any investment, either it is in a bond or debenture, it is always calculated on the face value, nominal value, not on a market price, neither on the cost price. So the face value of this investment is 5 lakh. So the correct answer is 25,000, because when we calculate the 5% on a face value, that is a 5 lakhs, 5% is 25,000, correct. The other option is 27,500, which is calculated 5% on cost of investment, which is not acceptable. The another option says that 23,750, that is calculated on market value of investment, which is also incorrect. And the fourth option is given 50,000. It is calculated on the market value, not market value. It is calculated on a face value, but it is taken wrong percentage, 10%. That's why it is 50,000. Henceforth, it is incorrect. So every option which is given here has given explanation how that is derived. But I'm not going to explain each and every item in detail. Only we'll be talking about the correct options, and incorrect options are not considered, not explained in detail. If I keep on explaining those, the video will be too long, and too long video, nobody likes it. Therefore, we will be restrict ourselves with the correct options only. I hope you understood this. Let's move on to the next objective. If equity share capital was rupees 50,000, calls in arrears shown rupees 2,000, reserve and surpluses are given 25,000, 12% debentures were the rupees 10,000, and the preference share capital rupees 20,000. So the total value of shareholders fund is, one has to calculate the shareholders fund, and I hope you know the what included in a shareholders fund. So let us first discuss the options first. Option 1, rupees 1,03,000. Option 2, rupees 1,05,000. Option 3, rupees 1,93,000. And option 4, rupees 95,000. So out of this, the one correct answer is there. So we need to take it into consideration. All the knowledge which you have, we have about the shareholders fund. Shareholder fund includes first the share capital, then reserves and surpluses. Share capital includes the equity share as well as preference shares. If there are any call scenarios, it has to be subtracted from it. And the reserves and surpluses, whatever items belongs to the reserves and surpluses has to be added. So let's work out. In this case, the shareholder fund is, the correct answer is 93,000. Why it is correct? Let's check out. The share capital is 50,000 and the call scenarios is deducted from at 2,000. So 48,000 available, which is added by the preference share capital of 20,000. It is given preference share capital 20,000. So total shareholders fund is 68,000. 48 plus 20, 68,000. Plus reserves and surpluses, there is a reserves and surpluses are given 25,000 added it. So the total amount of 93,000 is the correct answer. Option 3 is correct. So the other options are calculated in this manner, which is either taken on a wrong assumption or with a wrong amount. Therefore, those are not correct. This one is correct one. These three are incorrect options. So let us go for next option, objective, or the MCQ. ABC Limited started business on a 1st April 2019. It's a paid, it paid advance tax rupees 2 lakh for 1920 and current tax provided for 1920 was 1,80,000. It was paid advance tax for 2021 rupees 2,50,000 and current tax provision rupees 2,80,000. What would be the company's position on a 31st March 2021 in regards to advance tax and current tax? The assessment for 1920 showed gross tax demand of rupees 2,25,000. This one is a nice adjustment, nice MCQ, having a little bit typical side, tough side. No, so let us try to get the options first. The option 1 says tax payable should be rupees 25,000 and advance tax should have a balance of 2 lakh and current tax position should be 1,20,000. That's A option says. B option says tax payable 25,000, advance tax 2,50,000 and current tax provision is 2,80,000. Third option says that tax payable is 2,50,000, advance tax is 25,000 and current tax provision is 1,80,000. And the fourth option says tax payable 2,50,000, current tax is 2,50,000 and current tax provision is 2,80,000. So one has to consider the gross tax demand before calculating the net tax liability. So let us check out which one is correct. The correct answer is B. Tax payable rupees 25,000, advance tax rupees 2,50,000, and current tax provision is 2,80,000. Why this is correct? Let's understand here. See, the tax liability for 1920 is given. Check out tax liability for 1920 is 2,25,000. That's what we understood here. The tax liability 1920 is 2,25,000, for which the company has paid in advance in a 1920s year. Advance tax paid was 2 lakh. We deducted from it. So the balance advance tax was given 2 lakh, but the requirement was 2,25,000. So 25,000 not yet paid. Tax payable is 25,000. That's what it is, right? And the subsequent periods tax liability provision, advance tax and provision is given. Advance tax is 2,50,000. So advance tax 2021 is 2,50,000 and nothing is adjusted against it. Therefore, it is nil and the balance remains 2,50,000 in that account. And the provision for tax for subsequent period was 2,80,000, which remain as it is. So the previous year's provision, 1920s provision is already taken into care. So the balance would appear in this manner. Tax payable 25,000 and the current year's advance tax is 2,50,000, which will be shown there. And the provision for tax will be shown as a 2,80,000. So the other option number A is taken in this manner, which is incorrect. C options is in this manner and D option is taken in this manner, which is incorrect because either it is assumed incorrectly or wrong amount has to be taken care of. So this one is correct. These three are incorrect options. I hope you understood it. Let's move on to the next MCQ. It says that Mr. Shinde, the MD of PQR Limited, entitled for 5% of the net profit as his remuneration, subject to minimum of rupees 50,000 per month. And the net profit for the purpose is taken without charging income tax and his remuneration itself, right? The company made profit of rupees 86 lakh before charging MD's remuneration, but after charging provision for taxation of rupees 31,40,000. Calculate remuneration payable to Mr. Shinde. That's good, but let us check the options first. Option 1 or A is rupees 2,58,000, rupees 6 lakh, rupees 50,000, rupees 6,02,000 should be received as a remuneration to Mr. Shinde. That's what the option D says. But we knew that the correct answer is the calculation of a remuneration 5% on the net profit before tax and before remuneration. So we need to add back the profits. So the correct answer is D option, rupees 6,02,000. Now let us understand why it is correct. Let's check. Mr. Shinde's remuneration is what? 5%, right? And the net profit given before tax, after tax, that's what it is said. The companies made a profit of rupees 86 lakh before charging MD's remuneration, but after charging provision for tax, rupees 31,40,000. That was the taxes deducted from it. So for getting the net profit before tax is we need to add back the profit, tax into the profit. So let's take the provision for tax. The net profit after tax was given 86 lakh plus the provision for tax 34,40,000. So net profit before tax and remuneration is 1,20,40,000. And that would be the 5% is the remuneration to Mr. Shinde. So let us calculate 1 crore 20 lakhs 40,000, 5% is 6 lakh 2,000 is what the correct answer. Then one can say, sir, there is another part of that MCQ says that the net profit as a 5% and it should be remain a minimum 50,000 per month. So 50,000 per month, when we multiply with the 12 months in a year, it comes to 6 lakh. Either it is 6 lakh or the commission, actual commission is 6 lakh to not commission, it's a remuneration 6 lakh 2,000. Whichever is more is payable to him. That's what it is said. Minimum is 5 lakh 50,000 per month. So minimum 6 lakh supposed to be paid. If it is 5% is more than the minimum amount, that would be payable. Therefore, 6 lakh 2,000 is payable to Mr. Shinde. So other calculation where it is wrongly calculated with the wrong assumption or wrong amount is to be considered. So I have given the explanation how it is. You can pause the video and check out how they have calculated the wrong amounts for showing as an option here. So the correct answer is this. Remaining three are incorrect. And why it is mentioned there. So you can zoom it and check out. So let's move on to the next objective. Objective number 7. While preparing company's financial statement on a 31st March 2021, what would be the effect of rent paid up to February 21 rupees 1,10,000 given in a trial balance? This is normally we called as a hidden adjustment or silent adjustments given in a trial balance with a smaller information in a bracket. They used to talk about like up to February rupees, up to February 2021, an amount is 1,10,000. So the correct options are, the correct option, we'll see it little later. The options are less rupees 10,000 to rent paid shown in other expenses, that is a profit and loss effect, and rupees 10,000 shown as a outstanding rent charge under the current liability. So the second effect they have shown current liability under the heading current liability, outstanding rent charge under the current liability. Okay. Then second option, add rupees 10,000 to rent paid shown in other expenses and 10,000 as an outstanding rent charge under current liability. Third option, add rupees 9,167 to the rent paid shown in the other expenses and rupees 9,167 as an outstanding rent charged under the current liability. D option, less rupees 9,167 to the rent paid shown in the other current expenses and 9,167 as outstanding rent charge under other current liability. So there is a outstanding rent paid. Rent paid, it is expenditure, obviously. So first let's check out which option is correct. The option B is correct. Add rupees 10,000 to the rent paid shown in other expenses and show when any expenses is outstanding, it will be shown as a current liability under the head of current liability, other current liability as an outstanding rent. Okay. So let's understand why it is correct, because whenever there is outstanding rent, we pass adjustment entry as rent account debit 10,000 and outstanding rent account 10,000. One may say how that 10,000 come into picture, sir? Because they have total rent paid shown 1,10,000. That is for 12 months. How we understood it is for 12 months? Because it is said up to February. Up to February, that's a second last month of this financial year. Therefore, it is 11 months. From 1st April to February, when you count it, it comes 11 months. And the last month, February, is not paid yet or not considered yet. Therefore, we worked out per month's rent is 1,10,000 divided by 11. That's what's shown it here. So outstanding, the rent is adjusted with the rent account debit to outstanding rent account 10,000. Therefore, the correct effect is what? Outstanding rent is paid, it will be added to the expenses, and the outstanding which is shown to the balance sheet as a current liability. Hence, this effect is correct. The other effect is shown that a wrong entry is passed with the correct amount. Hence, it is incorrect. There is a correct entry, but with the wrong amount. They have taken 9167 as amount. How would they have taken it is 1,10,000 divided by 12 instead of 11. They have taken it as a 12. Therefore, 9167 is incorrect. Same with the incorrect amount with the incorrect journal entry. That's why these answers are incorrect. This one is correct. Other three are incorrect. So let's move on to the next MCQ, number 8. While preparing company's financial statement on a 31st March 21, what would be the effect of rent received up to February 21, rupees 2,20,000 given in a trial balance? The earlier case, earlier objective was rent paid. This is rent received. That was an example of expenses. This is an example of income. So let's check out the correct, the options given to us and then correct option. Less 20,000 to the rent received shown in other income. And second effect, 20,000 rupees 20,000 as a rent receivable shown under the current assets. The second option, add rupees 18,333 to the rent received shown in other income, and rupees 18,333 as a rent receivable shown under the current liability. Add 20,000 to the rent received shown under other income, and rupees 20,000 shown as a rent receivable under other current assets. And the fourth option is less 18,333 to rent received shown in other current income, and rupees 18,333 as a rent receivable shown under current assets. As we knew, whenever their income is outstanding or receivable, that is called as accrued income, and we need to work out how much month it was, and we can say they have talked about February. It means 1 month's outstanding, 1 month's accrued. So we will calculate the correct answer is your add rupees 20,000 to rent received shown, and it will be shown to the other income, and second effect to the balance sheet, 20,000 as a rent receivable shown under current asset. Why? Whenever there is outstanding income, we will pass an adjustment entry. We have learned about that. The entry will pass rent receivable account debit to rent account. 20,000. How that 20,000? It's similar to the last MCQ what we did. Total 11 months outstanding. The rent is received. That received 2,20,000. When we divide by 11 months to that, 20,000 per month is what received, and 1 month it's yet to is received. Therefore, 20,000 is what taken into consideration. Therefore, the correct effect, current asset effect is current, outstanding interest is current asset, and the profit and loss account effect is to be added to the income. That's why add 20,000 to the rent received shown under other income is correct, and 20,000 will be shown as a rent receivable under current asset is right. The other three options, there is an incorrect entry passed for as adjustment, and they have taken into consideration. That's why it is incorrect. There is a wrong amount, correct entry with the wrong amount, because they have taken 12 months divided by for 2,20,000. So the 18 lakh 13,000 3,333 is the wrong amount. Though the entry is correct, amount is wrong. Whereas the incorrect entry with the incorrect amount. Therefore, we will not consider these answers. The correct answer is this. These three are incorrect. So let's move on to the next MCQ. While preparing company's financial statement on 31st March 2021, what would be the effect of leasehold land, rupees 1 lakh, for 5 years, starting from 1st April 2020, give the given in a trial balance? What would be the effect of these silent adjustment? The options are: write up rupees 20,000 as a leasehold land, depreciation and amortization, that's a profit and loss effect, and add 20,000 to the lease land shown under tangible assets. That's a balance sheet effect. B says that add 20,000 to the lease as a leaseholder land to depreciation and amortization expenses, and add 20,000 to leasehold land shown under tangible assets. Third says that write off rupees 1 lakh as a leasehold land as a depreciation and amortization expenses, and less 1 lakh from the leasehold land from tangible assets. And the last option says write off rupees 20,000 as a leasehold land, depreciation and amortization, less rupees 20,000 from leasehold land shown under tangible asset. And the correct option is the fourth one. Whenever you charge a depreciation on any tangible asset, it has to be charged to the profit and loss account under the head of depreciation and amortization. Therefore, leasehold land is written off. It is amortization of that particular tangible asset. Therefore, it will be charged. And the second effect, it has to be deducted from the gross worth of that particular tangible asset, less depreciation. Then it would be the net block will be shown to the upper column. That's why 20,000 would be deducted. Why 20,000? Let's check out that. When you charge a depreciation, we pass the entry depreciation and amortization account debit to leasehold land account, and it will charge debit side, not debit side. The heading is depreciation and amortization under the expenses of the profit and loss statement, and the second effect will be shown under the notes to balance sheet number 10 under schedule 3 is a depreciation tangible asset, in which we will show that the ledger format is given for that, not ledger actually, the statement how to prepare is given under schedule 3 of amended Company Act is given there, and according to that we have to take into consideration. So the correct answer is this. So the second one is an incorrect journal entry with correct amount. The third option is correct entry, but incorrect entry because they have debited to the land, lease land, and credited to the amortization. That's why it is incorrect. And it's a wrong amount. Correct entry with the wrong amount. Hence, these are incorrect. This one is correct. These three are incorrect for us. Hope you are understanding it. And the last MCQ for today's discussion. While preparing company's financial statement on 31st March 2021, what would be the effect of loan at the rate of 5% per annum from XYZ rupees 1 lakh taken on 1st April 2020, and the interest paid on the loan is rupees 3,000 is given in a trial balance. So the options are: add rupees 2,000 to the interest paid to the loan charged under the finance cost, show rupees 2,000 as outstanding interest shown under current liability. One is a profit and loss effect and another is balance sheet effect. Add rupees 5,000 to interest paid on a loan charged under the finance cost, show rupees 5,000 as outstanding interest under the current liability, less rupees 2,000 from interest paid expenses finance cost, show rupees 2,000 as outstanding interest shown under the current assets. And the last option, less rupees 5,000 from interest paid charged to the expenses under finance cost, show rupees 5,000 as outstanding interest under current assets. So the correct option is the first A is correct one, because whenever you have taken a loan, you're supposed to pay the interest for entire period. So 1 lakh is the loan taken for at the commencement of the year. Therefore, we supposed to pay 5% on 1 lakh as a total interest. So the interest to be paid 5,000, but actually how much it is paid? 3,000. Therefore, 2,000 is not yet paid. So let's check it here. Total interest to be paid 1 lakh at the rate of 5% is 5,000. But the outstanding interest, how we calculated? 5,000, out of which 3,000 already paid, 2,000 yet to be paid. That is outstanding. Therefore, the adjustment entry will pass interest account debit to outstanding interest account, rupees 2,000 each. So the ultimate effect of these adjustment entry would be add rupees 2,000 to interest paid on a loan under the finance cost. And a second effect, it will be shown as a outstanding interest under the current liability, which is liability which will be paid in a subsequent period. Therefore, this option A is correct. B is calculated with the wrong amount. C is calculated incorrect entry with the correct amount, and the correct amount with incorrect journal entry. That's why this one is correct. These two options are incorrect. I hope you enjoyed this video. Thank you guys for watching this video. And if you have any queries, doubt or difficulties, please do write in the comment section so that I can answer as early as possible to you. If you have enjoyed the objectives discussed in this video, please do click on the like button. And if you want to uh, see such kind of videos in the future also, please subscribe this channel and click on the bell button to receive the notifications of such videos to be received by you. So thank you guys once again for being with me. Enjoy it. Bye-bye.